Good morning. Good morning. Good morning. We are just getting started, 3 minutes away from PMI. Just getting situated. It's a little bit later. I wanted to wait till news came out before I actually got on, just because if you saw yesterday or was trading with us yesterday, the news actually impacted the way we traded significantly. So we are just sitting down and we're going to get started. So we're going to go over the charts. I'm a little bummed that we already hit the daily fair value gap. Is what it is. We'll make do with it here. So daily fair value gap that I'm referring to is sitting right here. So it is right there. So let's go down to the 4-hour. That's really what I wanted my target to be. Your next target would be this swing high on the daily time frame. Or no, it would be this candle here if we are going to go towards that. So let's just call that previous day high. And let's drop down to the 4-hour. So there's the previous day high, and then here's our previous week high. And on the 4-hour time frame, we're sitting inside the 4-hour fair value gap right here that's also overlapping. And then we have a 4-hour fair value gap that is above these swing highs right here. Okay, so these are the big levels that I see immediately that you just want to make sure you are aware of when trading, because these could be draws on liquidity, and we want to make sure that we are we want to make sure that we're targeting the right side of liquidity. So news is coming out in 15 seconds. So I have the higher time frame here. Let's go down to the 1 hour. 1 minute there. All right, so this is going to be, we have these equal highs right here. This is the news candle right there. It looks like we're going to run the liquidity on the sell side. It could be just a purge and go higher, or we could go lower. We just need more context. We don't have really any context right now. The context we had is from 8:30 we went higher and chopped around here, grabbed this liquidity, but we're not running for 8:30 lows, which was a news candle. And we are also in premium when we look at this swing high to this swing low. So here's swing high to swing low. Those are quarters. Here's our equilibrium. So we're in premium. We're in extreme premium right now. This is the area that you'd want to go short, but we need evidence in the charts to show us that we want to go short, that we need to go short. And right now, nothing is showing us that we are going short right now. Oh, let's get that set up. All right, so on the 1 hour, we still have these equal highs sitting right here. Let me zoom in here. We have these equal highs. See all that right there? These relatively equal highs sitting right below this 4-hour, and that's also overlapping with this breaker right here. So this breaker is sitting right there. So that's that breaker right there. So we could, I'm going to keep track of that level, but this is a 1 hour time frame. I'm not going to take any type of entries off of a 1 hour. Why is this not going? Sorry, I thought it was working. This is the 1 hour order, or this is a 1 hour bearish breaker right here, and that's that line right there. So it's overlapping here. Now, if we take this chart down to the 15-minute, look at the bullish reaction we have off of this order block. So this is a bullish order block, and we see price that wicked down into here, and it's also at the consequent encroachment of the daily time frame. Now, this is not going to be irrelevant until the close of the day because it's a daily time frame. So we have a lot of time for price to move up and down over this daily fair value gap level. Not seeing anything right now, guys. I'm not seeing anything as far as anything major to note, and what I'm sharing with you is what I'm seeing. But I'm just trying to get a higher time frame context. So going back to the daily, we're still in the first week of the month. So there's 4 weeks in a month, and you can break that down as XAMD or AMDX. X is, we'll call it the X factor as far as what price wants to do, and it can happen before or at the end of the month. Usually it's towards the end of the month. But we're looking at this first week. If we just take the first week, the first day or two is usually consolidation. And yesterday we had a consolidation in the morning, and then we started moving higher towards the end of the day, and that was the move that I was really waiting for. And I called it out in the morning that I thought we could move higher, but it literally took most of the morning just to get through all the chop, and then it started running in the afternoon. So let's go down to the 4 hour. This is the 4 hour time frame. And this is the we're going to take this swing high to this swing low. This is our 75% level, 50% level. See where all this accumulation happened yesterday? Right around 50% of this entire range. So that's not surprising. Not surprising at all. Why is that not working? Sorry, it's not working, guys. So we're literally just straight up chopping. This is disgusting. We're going to stay out of this. Even though news is already done, we ran the sell side first. Okay, and it looks like we're wanting to go back towards that. Let's look at our regular trading hours here. And let's see what we have as far as regular trading hour target. We are really high, so I'm going to think we're going to go lower here. We are so close, however, to some of these swing highs that it makes me want us to hit these levels here first. Here's this swing high right here. Look how close we are to that. Now, I've made the mistake in the past where I thought that we were for sure we're going to hit this high before we started running lower, and then it ran lower without me. So it's very possible that it could run lower, but if we know this level is above us, before we go short, we need to make sure it's a clear and obvious setup. And this would not be that. So right now, I'm going to look at the PM from yesterday, the PM lows from yesterday. So here's lunch, here's 6, here's 26. Okay, so this is basically the PM lows. These are PM lows from yesterday. Previous day PM lows. That's our first target. This is an ICT concept called one trade for life setup. One setup for life, I think. I'm sorry guys, I'm gonna have to answer this. I have somebody calling. Sorry about that. Good morning. Good morning. I had a phone call and decided to take it. Where was I? I was going over PM lows. I was going over the One Setup for Life by ICT, which he talks about targeting the previous day's PM lows, depending on where you are as far as the market. So the next target would be the AM lows. The AM, so we're so far above that right now that we have this huge gap. So let's run out of the regular trading hour and let's go and let's see where our PM lows are, or AM, our London session lows. So this is our London session low, which is between 2 and 5. And so this is going to be our London session low. So that's really what we're looking for as potential targets to the downside. And downside as well, if you switch over to regular trading hours, we have this huge opening range gap that I would love to use as a target to get filled. So let's see. This is where that's our opening range. That's our opening range there. We're just going to leave that there for right now. We'll make it a little bit lighter. So it runs to all the way down to the London lows. So I would love for price to run all the way down there and give us a setup. The only potential setup would be this right here, but based on what I've seen in price action so far, I'm not going to take that. It's a little choppy, a little nasty looking, and we had this nasty candle right there. Looks like the 30-second gave us an entry right here and targeted these swing highs right here. Yes, it is for sure just what it was yesterday, which that means, I mean, if you look at the afternoon of yesterday afternoon, it had some nice, decent runs. So there's opportunity. It's just a matter of being patient and waiting for that setup. So I'm not going to take this, even though it is part of the model. And the main reason is right here we have equal highs, and right here we have a swing high. I'm just not going to do it. And how choppy it was. Now, a scenario where I would potentially take it, if we were really sharp in our execution and then we started stagnating and we came up, didn't quite hit it but got really close to it, and then had a large displacement candle, I would consider running the other direction. But when we're consolidating right here, this is not the price action I want to see to go higher quite yet. I would love to see a dip and then higher, but this candle right here kind of this news candle throws that out the window, because it already purged this liquidity here, and it technically would not have to go lower if it wants to go higher. So at this point, we're just waiting for more information to give us an idea of what could happen with price. That's a 30-second. There's nothing here on the 30-second. We'll wait till we start seeing display. Basically, at this point in time, we have equal lows here. We have a high here. We want to see displacement, not wicks. We want to see a solid full body candle one way or the other. That's going to start grabbing my attention. Until then, we just watch the charts. We look at past moves that we potentially could have had. Here was an entry in the London side, or the right after 8:30. I wasn't on the charts, but you have this swing high right here. Look at this. This would have been a breaker model right after the news candle. Here's 8:30. We went down, we grab liquidity, we find some support in this fair value gap. We break higher above this swing high right here, and it tags into this fair value gap sitting right here. It doesn't hit this level, it doesn't hit the high of the breaker, but comes into the overlapping fair value gap. So even if it comes into a fair value gap, that still is a green light for an entry. It just depends on if you want to do the fair value gap, if you want to do the swing high, or if you want to do the close. Those are my three entry models within the breaker. And obviously, the higher up you go, the more likely you get in, but the more risk you potentially have on the table. If I was to wait until the close of the breaker, well, I would have never gotten that entry, right? So it would have provided less risk, but you also get a greater chance of missed opportunities. So that was a move there. This was New York Open. New York Open provided another breaker with a high, low, higher high. We break lower, displacement, close lower. That would be a CISD. And then the candle comes back up into this fair value gap and into the breaker, and the body respects the breaker, and then it runs the other direction. Obviously, I would never take this, but this, let's see how much it runs. Runs 20 handles, a little over 20 handles. So nice win there. So there's several breaker opportunities that you can take. You just got to be nimble. You got to be quick. You got to understand that the market can literally run in either direction. I mean, look at this. The first thing I see in all this is all these green, light green, these dark green and black lines. I mean, it literally just chopping back and forth, wicking up and down, and just staying in this tight consolidation. Even this news candle. Look at this news candle and look where it closed from the open. Hardly anything. All right, so this is the 1 hour. What is this candle? 9:30. Nothing here, my friends. Nothing. Why do I have this high here? So this is our swing high that I referenced. This is a breaker. Holy macaroni. Absolutely horrid. This is horrible. Technically, until this candle, we're respecting this breaker. If you want to take that breaker, there you go. That's your entry. I'm not doing that. I mean, look at this price action right here. Even though this is my model, what's my model? We got a high, low, higher high in the form of these bodies, and then we displace lower even below this candle. I'm not considering this news candle at 10 a.m. right here. And price went lower and came back up and is respecting this down close candle right here. This down close candle, the whole thing is the breaker. My entries that I'll consider taking entries on are the low, the close, and really the mean threshold of the body if it's a large candle like this. So this is still valid, but we're not going to touch it. Why? Because it's done all this and we need to see where price wants to go, and we need to see a displacement candle such as the one we are seeing right now. As long as this candle closes with a full body, well then we have something to work with here. Okay? So that's helpful. So we closed below this. We grab these relatively equal highs here. Yesterday there was a real good short in the afternoon. I'm guessing it is because the morning session was just consolidation. Yeah, and that's indicative of ICT has a one trade setup for life, and that is where it talks about how if the morning session is consolidation, you can look at those highs and lows, and the afternoon session will run those. And it ended up running it, and it ran higher. So for today, I'll be executing off screen again. I'll have my micro accounts on another screen. This is my mini screen. This is my main screen that I do my analysis on. If you trade micros, you should be trading if you're trading on micros, you should be doing your analysis on NQ. You should be doing your analysis on the minis, not the micros. So executions on another screen, simply because I don't want to do my main analysis on the micros. All right, so it looks like we're starting to finally push higher. This is a breaker, really insignificant in my opinion. I'm not really paying any attention to it. And I'm watching these highs right here and this 4-hour fair value gap. So here's the 4-hour. All right, so buy side just hit right there. A level of buy side. Could we go higher? Yeah, we could. But at this point, at this moment in time, now that we hit it, we want to see a couple things. Where does it close in relation to this high? And what do the next few candles look like? Are we going to get a rejection? Are we going to get a close higher and then a retracement back into this level or a little bit lower? What's going to happen that could tell us price runs the other direction, right? And now this allows me to at least look for a bearish breaker for a setup, because honestly, if we go down again to the regular trading hours on TradingView, we have this giant gap right here that I want to see price move down into. This is ultimately my target area of where I want to see price eventually run to, because we already are in premium. We're really in extreme premium. If you look at the 4-hour time frame, right? This 4-hour time frame right here, from this high to this low, I broke it down into quarters. These quarters here represent anything below 50% is discount. Anything above 50% is premium. Anything above 75% is now we're really in extreme premium. Could we push through this and push through this high? Absolutely, because we're at all-time highs. You have to use that as part of your analysis. The other thing is, if we want to range, because we have NFP tomorrow or on Friday, which tomorrow is a non-trading day. Tomorrow is a demo trade only. We might consolidate here and wait for Friday to actually move. So today's Wednesday. These are the days Wednesdays and Thursdays, you tend to begin to see reversals. Wednesdays and Thursdays are reversal days. So we grabbed this high. We went into the fair value gap. Did we actually? Yeah, so we tagged. So here's our fair value gap for the 4 hour, and we went up and respected the consequent encroachment, and now are finding maybe a level of consolidation. Maybe this is where I would want to see this candle right here form a swing low in this fair value gap or this fair value gap right here. And then I'd want it to see it come back and mess around in this fair value gap again, and then I'd want it to see run lower. That's what I'm looking for right now. Good morning, Raul. Glad to have you. Yesterday, Rawling said the smart money could be positioned above the midnight opening spread. I think the algorithm is only in search and destroy mode. Yeah. Since I doubt the large capital place positions before Anaheim pick news, today I'm going to rest. Leave my like. Thanks. I appreciate it, man. Hang out. If you have any thoughts, I appreciate it. So, all right. So see how it wicked lower. It didn't actually tag this fair value gap, which is sus. It means that we might just keep moving higher. If we're in a buy program, this is a typical picture of what a buy program looks like, where I'll just wick lower, usually into a fair value gap, and then push higher. Since it didn't go all the way down, it's basically creating relatively equal lows. I would want to see this come and tagged. Okay, what else do we got here? This is the 1 hour. Really nothing. I mean, you could do this swing high right here, this 4 hour. But, I mean, these are just so small. I mean, we could reach all the way up to here. But at this point, there's really nothing for us to look at. We get to exercise a different muscle today, my friends, and that is patience. Great muscle to exercise indeed. A great muscle to exercise indeed. When I first started out, though, man, I was like, the only thing I cared about is how can I make money doing this? Can I make a little money while I'm learning? Can I make, just a few bucks while I'm, trying to cut my teeth on the charts and cut my teeth on a model and learn everything? And then I got to a point, it's like, this isn't working. Money became more important to me than education. And I was so afraid to lose that I wasn't allowing myself to really exercise a proper stop loss. And so since then, I've really just become more education based for myself and understand that income will come as a result of me choosing to make education my highest priority. So education has been my highest priority, learning how can I improve it. As I continue to improve, that desire to make more money has come back. But I mean, that's why we're trading, right? We're trading for money. But it has helped me allow for stops to be hit and TPs to be ran. But being patient was non-existent back in that day because I wanted to make money and I'm like, well, I got to make money today. I mean, yesterday I took one trade for a break even, then I did an eval trade for a win. And that was it. And I was off the rest of the day. I did no more performance account trades. And I'm sitting here today. We might be doing the same thing. It really just depends on what happens with price here. We need to see what price wants to do. So this is the previous day high that we may be targeting. And then above that, we have a previous week high sitting right here. And then all-time highs are sitting right here. Just so you have an idea what's on my chart. Previous day, previous week, all-time high. I'm going to mark this 1 hour here. I think there could be some significance to it. So the question people have is, man, FOMO's hardcore. It's real. I'm missing all of this move. My question for you was, where would your entry be? Where would your entry be? There is not a single entry in any of this. I mean, maybe if you go down to the 30-second. Let's see. Okay. There's a 30-second entry that I would not be taking. And that entry was right here. The close above this fair value gap right here would have been your only opportunity. And it did start running at that point. However, I mean, we closed within the range. We closed here. I'm not gonna take that. And at that time it was 10:20. We're outside of the macro time. It's like there's no reason that it doesn't have to run. I mean, my entry model ideally is between 9:45 and 10:15. So this is outside of that range. Obviously, there's still moves that run outside that, but there was not a single entry for me to really consider in this chop. Not at all. We found support at this high when we came back down. That's a good sign for higher prices right here. When we close below it and then close back above it, that's a sign for higher prices. But that's not one of my models. So right now, price is just exploding through all these levels and running higher. So we're going to get rid of this 1 hour. And well, let's move this to the next 1 hour fair value gap. This is the next 1 hour fair value gap that, because of how small it is, I'm expecting us to just run right through it. Then we get previous day high. This really, I think, is my target at this point. And we don't even have to hit this swing high on the 1 hour. There's a swing high right here. Yeah, I can understand why people. I mean, this is boring. All right, let's see what happens here. Let's see it tag this down close candle right here. All right. There's a tag on the down close candle. This could be a propulsion block. You could do an eval entry long right here. Unless we close below this, obviously. So seeing how price wants to react right here, there's no entry model for me to go higher yet. Maybe if we inverse this, this is the 30 second as well. So the 1 minute, the 1 minute did close below that, but I'm not going to take that on the first one. I'm going to look for this to go higher right here. That's what I'm expecting. But I would look at this as my breaker for a bearish breaker in the future. So now that we have this bearish breaker potentially input, we're going to see how price reacts with it. So I'm looking at price going higher right here. And you could play off of this 30-second inversion if we close in 10 seconds above it. And you could do a quick scalp for this high. Are we going to get it? No, we're not going to get it. It's probably going to run right here. If it is going to run, it's not going to really give us an entry. And I don't like how small that fair value gap is anyway. All right, so we tagged into this fair value gap right here. That's what we were missing from this 1 minute candle, is we stopped, but we have this 1 minute that I guess we're going to find some support at. But I'm not doing anything with this, guys. We're too bullish to want to go short right now, and I don't even have a model. I'm not going to take an inversion off of this first play. That's just insane. That's just dumb. So we're gonna probably find, I'm looking at us finding some support right here. We could really come all the way down to this bullish breaker or bullish order block right here and still be bullish and move higher. Isn't that funny? With this tiny, insignificant 1 hour fair value gap. But here, I want to go back and I want to talk about this. I made a comment. I'm like, I expect this to blow right through it. Now that I'm seeing it stay here, there's something that I want to point out. Look at what that is. Okay? What is this? This is the last 1 hour fair value gap before swing high. That's what makes this significant. More significant. I just thought liquidity was just going to run right for it. I think we're going to eventually push through it and grab the highs. But see how it turned here? This is a model. This is one of my breaker models, is when you have the last fair value gap in a leg overlapping with a breaker, I'll use that as an entry. Here's the 15 minute on that. Let's see what we got on the 15 minute. This is also the last 15 minute candle or fair value gap. And it's not a breaker, it's a mitigation block. So this is the mitigation block low. It tagged it to the tick, and it gave us a play for what? Basically 20 points. Okay, so that's a 15 minute. Now let's go down to the 5 minute. Let's see if this also is on the 5 minute here. For the 5 minute, this is the last fair value gap run. So we have this fair value gap right here as well. But it's a part of this bigger fair value gap. So this is all one big fair value gap on the 5 minute. So my guess is on the 1 minute we're going to have plenty. There would probably be higher, lower time frame entries. Yeah, so you have smaller fair value gaps here. And then up here, that's already been tagged. And then this volume imbalance from the new day, from a Tuesday to a Wednesday. Got nothing here, guys. I'm just coming up with potential ideas. Like if we don't go any higher and we have this and we don't get an entry here, we're really looking for maybe price to come down to 50%, which is this fair value gap right here, and would also run into this bullish breaker in the form of the bodies. This bullish breaker right here for a continuation higher. That's an option. We also could just find support here and then run higher and hit those levels immediately. And if we hit those levels immediately, then we're looking for a short setup. Now here's a stab lower and it left a fair value gap right here. I like this. And it also is in our I will probably take a small trade on this. We tagged this swing low. If we close above this fair value gap right here in 37 seconds, that would be something that would be an entry model. Doesn't look like we're going to get it right now. I'm glad you appreciate the price reading. I mean, that's where the real learning takes place. Real learning does not take place in the actual trades. All right, so we just tagged this fair value gap now. Oh, no, we not quite. Not quite tagging that one. And to be honest, we're so high in premium that it's hard to want to go long. Does that make sense? Let's see. It's not working yet. So we're in the macro now. The 10:45, 11 a.m. macro. We're now looking to see what price wants to do. Right now, there's not a bearish order block, bearish breaker. So for me, really what I want is I want this to break and I want us to go make a higher high. That's really what I want. All right, we just tagged this fair value gap. I want to see us run right now. I will take this trade. The only thing I don't like about it is that, like I just said 2 minutes ago, is we're in premium. Okay, it did not close. And this means it could run without us. It did not close. That sucks. Made equal highs here. That's a good sign. All right, so now that we hit this swing high, it invalidates this trade idea. If you did get in, you're moving your stop to break even right now. Your stop to break even would be right here. And you would be targeting, so this would be your entry, this would be your target. Your stop should be at break even right now. All right, so you're stopped at break even right there. So because we hit the swing high, before we broke this fair value gap, it invalidates the trade idea. Now let's see if this plays out and protects us from taking a long. I don't want it to go short because I really want it to make a higher high, so I have an entry model for a breaker. All right, so we just inversed that fair value gap. We're not taking that short because there's nothing, we're not redelivering from anything. I really, guys, I mean, if I'm honest, I'm really interested in this opening range gap. That's really what I'm interested in. Here's a 2-minute. Here's a fair value gap that's left right here with a swing high. Let's see if this closes and leaves this 2-minute fair value gap. We got 2 minutes for that to happen. So let's talk about another scenario that price can do. Okay, let me zoom out here. Let's make it a little bit smaller. Okay, so let's remove this. We obviously know that's the 4 hour. It's irrelevant for us right now. Okay, so with everything that we're seeing here, let's remove that. We'll keep just this fair value guy. Okay, so if price comes all the way back down to 50% or close to it, and we get a low, high, lower low into this level, well, that's our bullish breaker into these highs. And we could play a bullish breaker into these targets up here if price continues to retrace down to a 50% level. And I say retrace because this high to this high, 50%, we come down to 50%. That's typically what you'll see many times, and then price will move higher to the higher targets above where current price is. Now, if price then breaks below this 50% and continues lower, that's where I'm going to start targeting, and I'm going to look for an entry on this bad boy here, on this opening range gap. So right now, those are my scenarios that I'm looking at. The other option is if we continue to support this price and the 2 minute, which closes in 1 minute 25 seconds above this level and does not hit this high, that would be an opportunity to go long as well. But because we're so high in premium, it's not as high of a probability. It's, if we were to rate it on like an A, B, C scale or A plus, B plus scale, it's probably like a B plus. B plus to A, not an A plus, because of how high we are. That would be a phenomenal trade if we were way down here towards equilibrium where this level is right here. Oh. "14 seconds. Doesn't look like it's going to close, guys. No entry there. This looks like a bear flag, retail concepts, that people are probably looking at going long right here. I know other traders that will look at going long right here before it inverses. You want to wait for an inversion of that 2 minute fair value gap for sure. That's our only opportunity right now. So that's irrelevant now. Let's go back to the 1 minute. 1 minute, we got another fair value gap and this bullish order block right here. To me, the most significant at this point, since we violated this first fair value gap, this one we violated right away. But since we violated this one, how do I pick which fair value gap is going to be the strongest? We need overlapping PD arrays or other things that coincide with it. So this bullish order block is sitting right here, which is also inside this 1 minute BISI. Right? So this would have some support. We are holding this, but I'm just saying, like, I could see price coming down to here, finding support here because of this bullish order block. That's how I personally right now, there's a lot more on order blocks that ICT has not taught and stuff that he's taught that I don't use, but I use it as reference points for support when we have instructions for buy side. So this is clear. We have a set of instructions, an algorithmic input on price moving algorithmically higher, and it will look at these order blocks, find support there, and then continue higher. I don't think there is anything else here for us to consider. I mean, you could still look at this 2 minute, but it's 3 minute, there's nothing. 4 minute, there's nothing. 5 minute, there's nothing. We're still on that 5 minute fair value gap. So really the only thing is, whoops, 5 minutes. All right, so if we close above this, that might be something to look at. Might not give me an entry because I'm not willing to take it quite yet. If we tag in here real quick, I might take this as a long, but I'm glad we didn't hit this high. If we hit this high, it becomes irrelevant. I wanted this to close. It's just a 2 minute. On quick moves like this, the 2 minute just takes so long because I got to wait for another minute for it to close without hitting this high, come back into this fair value gap, and then I'll use that as my long. All right, I mean, I could have got in on this close, right? My stop would be to break even. This would have been a legitimate trade. But what happened previously? Did you see how it didn't work out here? Why would I then assume that it's going to work out on this one? I can't. I have to wait for additional confirmation. And my additional confirmation was a wick in and then basically an immediate rebalance. So if we went from here, let me zoom in here. Let's get it closer so I can really articulate this. All right, so here's our fair value gap. We break higher and we close. This candle right here closed and then retraced and would have been for a loss on the 2 minute. Looking at the 2 minute. My additional confirmation would have been, okay, we closed above it, we have the new candle, we do an immediate rebalance lower, tag this fair value gap, and then move back higher, and I would have gotten in right here if this candle showed up right here. Boom. In higher. That would have been my entry. That would have been my entry, and then I would have wanted this to stay open as a fair value gap, and then we run these highs. So that would have been my additional confirmation, because we did not respect this previous this inversion. So that's why I didn't take it. Now, I would have changed that opinion if this 1056 candle ran the lows. If we ran the low and then made this aggressive candle, I would have got in immediately, probably. Why? Because we ran liquidity, and usually you have manipulation before distribution. So I would have wanted to see manipulation, then distribution. Yet this tiny little wick below this candle is not my level of manipulation I'd want to look for. All right, so there's the high. We're probably running for this level right now. I would want to see an aggressive just push. It's gonna hit. It's gonna hit. I'm on the 2 minute here. Let's go down to the 1 minute. Let's see what that looks like. All right, so if we don't hit, here's a breaker. Do I want to take this breaker? Probably not. We're just so high. We're in extreme premium right now. We're in premium. I want shorts in premium. That's why I'm pretty confident that there's other ICT traders probably went short in this and didn't take it, and got stopped out in all this. Because you don't want to look at taking longs in premium. I mean, as a general rule, there are reasons to break it. All right, what did we just do? We tagged into this fair value gap when the algorithm gets a set of instructions to spool higher, they'll find its first fair value gap as support. So let's see if this actually wants to find support here and then move higher. I don't make trades off of this unless I'm in discount, but this would be that model here. Stop loss would technically be below this candle, the 1103 candle. Do you guys appreciate me giving trading models even though I'm not taking them? Because I'm not taking this. I'm not telling you to take it. I wouldn't recommend taking it, but it is an entry model based on what you're seeing right here that you can get a slight retracement, especially because we're so close that it'll tag this and then run for the liquidity. Now, I've seen price come this close to a swing high. If the market really is bearish, meaning it doesn't want to make a new all-time high, it can stop below these levels and then retrace. So we could see this as a bearish breaker right here. Why? We already hit a level of liquidity before. Now, we just respected this 1 hour. This 1 hour blue box, if you go to the 1 hour time frame, the 10 o'clock candle, closed below it, and now we're in a new candle with 50 minutes left. So we literally could wick higher and then still close below this 1 hour. Hypothetical scenarios. That's what we do. All right, so we just broke this. Let's see if we can get a level of displacement. Can we get displacement right here? All right. If we close below this right here, that would be also an inversion entry. And it looks like it might do that. Let's see what happens here. 1 second. So it's a close. That would be an entry. I'm going to wait for a retracement back up into here, and then I'm going short. I want to see how it reacts here. I'm not taking on the first stab through. I want to see it find some resistance right here. Okay, are we going to find resistance? Or are we blowing right through? It looks like we're blowing right through. Let's see where it closes. We have 30 seconds left. Okay, I don't want a full body candle towards the close, towards the end. Okay, so this is no trade. I'm not taking that. Okay, so you see how it still could play out. Look at this inversion that it made right here. We didn't take that. It was aggressive. I was waiting for it to come back up into here for extra confirmation. But I was not going to take it on the first stab because of how aggressive this candle was, and I've seen just immediate rebalances. This is going to go for the highs right here. And where did the body close? It closed above the body of my breaker block, which I'm not interested in. So I'm going to sit out on this one. Even if it turns right here and runs 1,000 points in my direction, it can go without me. I'm not going to take that crap. It's going to hit. And with this momentum, with this type of momentum I'm seeing right here, it could run even more. It could run even higher. So we just ticked above that. It's going to come back in. A reversal is a purge, not a tick. We want to see it push through 5, 10 handles and then retrace and close below that level. This tells me it's going to come back up here and run again. Because think of where all the stops are, right? If people are putting their stops above the previous day's high, so from May 28th, if they're going to use May 28th as their highs, right? They're going to put it, they're not going to put it just a tick above it. They're going to have a good amount of, they're going to put a little bit of distance between that high in case price wants to do this wiki stuff and then go back in. So they don't want their stops to get hit. So what does the algorithm do? It's going to push right through those levels to pull those stops, those buy stops, and then what is it going to do? It runs the other direction. I'm not saying that's what's going to happen right now because we have a higher level potential swing high with maybe even more liquidity, but this is the concept that we look for. What is price doing after it purges the liquidity? Is it going to close high? Right now, 14 seconds, it looks like it wants to close higher. So that tells me this is not the level. There's another level higher that we need to keep our eye on. And boy, oh boy, man. I mean, we just missed some opportunities. Oh, lost opportunity. We're making it out green today, boys. We are making it out green. I mean, this was an entry somebody took as an inversion. I guarantee it. Like, oh, it closed. We're going to go lower. It comes back up. It closes above my breaker, so I'm not taking that short. And guess what it does? It goes higher. This is why I mean, there's no way you know this on their first day. You got to know the rules. You got to know what you're looking for. And this is why you have to start with demos, start with small size so that you are not blowing your account. Because I guarantee you, if you were to thumb through other live streamers that are on today, I bet you they've taken 2-3 trades and they're down thousands of dollars. I mean, just, it's inevitable. It's just, I guarantee you that's what's happened today. All right, so I'm going to go to the 4 hour here and I just want to get a picture of this. All right, so here's this swing high. I want to see this just run right to it right now. And even still, it didn't give us an entry here. It didn't give us an entry on the 1109 candle unless you go down to the 30-second, and I bet you we got one. All right, so right there, this would have been your entry. You would have had to withstand a hefty drawdown, but then it runs your way very quickly in a matter of 1 minute. So this would have been an entry, but we've seen price just disrespect. I was looking at this breaker, so obviously I'm not going to take this. I'm looking at how it's going to respect this because I'm in premium, so I'm not looking for this long. So this is why we missed this long entry, because I'm looking for a short in premium. That's where we're at. But we obviously have a higher level. We just hit that target. We just hit the swing highs. Let's see how price reacts right here. Here's a potential purge. We're pushing higher. We do have another swing high, which would make this a new dealing range right here. That's the high of the high. All right. We're only 50 points away from all-time highs. All-time highs are sitting right there. 19,023. We're at 75-ish. Around 70. So, I mean, that's 50 handles. Guys, these streams, these not taking a trade suck, especially when you don't get one right away. I love the streams where, man, it's like 10 minutes in the market and you're taking an entry. those make great. I mean, it makes live action. It's like, ooh, I want to get on again. I want to watch, Tyler make another trade. Who wants to get on and watch Tyler sit here do nothing for how long have we been live? An hour and a half for 90 minutes. That's what I did yesterday. 90 minutes of one break-even trade because I didn't like it because of all the consolidation. All right, so price looks like it's still wanting to run for this high here. It is running, my friends. It's running. It's going to hit. I lied, guys. I'm in an eval account from the lows. I'm up 50 points. That's not true. That would be nice if I was. Did an eval long from the lows right there. All right, so very common. Right before price hits its high, it's going to do a retracement. Now, the question is, does it do a short retracement or does it do a deep retracement? We don't know. You're not going to know that. You're not going to have that. You're not privy to that information quite yet. It's nice that we have an order block right here. So this order block is going to probably provide a level of resistance. Let's see where this candle closes. But that's what I would expect it to find support around this order block. Because if we don't, then we could run all the way down here. We also have, if we don't, what we have right here is a bullish breaker that overlaps with a bullish order block. But to be honest, I'm not really interested in taking this long. I'll mark it out though. Oh man, oh man, oh man. Running without us, having fun without us. All right, so we closed at this high. So we closed at these highs. If we get an inversion right here, which it doesn't look like that's going to happen. Here's yeah, see that giant candle? This is what it's like. Oh, I'm running all this way, going without you. Get in long, short, 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 short. Then it's going to go long. Now, I want you guys to see something here. That's a 30-second. This is the 1 minute. Here's our first fair value gap on the 1 minute. On the 2 minute, guess what the 3 minute's going to look like? Oh, okay. Now it's the 4 minute. Oh, 4 minute looks good too. Look at the 5 minute. The 5 minute is just going to be a wick above these highs. We want to see how it closes. You could take this is a 30-second to the swing high. Equal high is here. So it just closed above. We'll probably hit these highs. That's my guess. Into this fair value gap. So that, I mean, that's a tiny move that I'm not taking. So that would have been you move your stop to break even right here. Your entry's right here. Your stop at this point should be at break even. So your trade should look like that. And then you want to target these highs. Let's see if this hits break even. At this point, this is 10 handles right here, so this is what I'd be running for. Stops at break even. It's a free trade. We're looking for it to hit these highs right here. All right, so there's your win right there. So you could have taken this 30-second, really tiny fair value gap that I would not trade. Break evens here. You could have made that a trade. The 1 minute came here. We closed too close to the swing high, so that's why I was not watching the 1 minute, because we are already this is too high. I wanted to find some. I went down to the 30-second because I wanted to see if there's a fair value gap down here. All right, let's see us hit these highs. And then probably what we're going to do, guys, and I'll probably be done here, is we're probably going to consolidate sideways for a little bit. Because, I mean, look at this trade. I mean, that's a move. Look at these. Look at that move. So here's this is the buy side of the market maker sell model, potentially. Accumulation. Reaccumulation. Smart money reversal. That's what we're looking for right here. So potentially over here, somewhere around this time right here. So let's put a, all right, so let's do it from the 10 o'clock candle. All right. So this could be what the structure looks like. Accumulation, manipulation. All right, did we tag those highs? We just tagged that high. We could see it, actually, before we just start talking about that, we hit that high. I want to see price here. We can have some movement here. We have 40 seconds. If we don't hit this, I would run for that low, but we'll probably hit it beforehand if it wants to move. I'm not sure. This is our breaker. Fair value gap on the left side. We want to see a fair value gap on the right side. Okay, so here's this would be a legit, how much? 58 to 63. This would be a valid short right here to this low right here. It's a little too close. I want 10 handles, so I'm not taking it. What I'd like to see is for it to play out. It tells me that we are respecting some discount or we are respecting premium or disrespecting discount PD arrays. So this is probably going to play out right here. I'm going to see it come and hit. All right, so there's our play. There's a short, inversion short that you could have taken right there. Now I'm waiting for the price to come back up here. I want to see it find some support around this order block, come back up here, and then I'd look at going short. We hit a significant high. We hit a significant high, guys, right there.
Order filled.
All right, I'm short right there. Let's see if it wants to push us right through. Stop loss is going to be 10 handles. So 71. This is worth taking. If I get stopped off here, that's okay. This is the type of trade that you take. Alright, so entry position is right. I'm in right there. My stop's 10 handles. Stop's right there. This is my model. We hit liquidity. We have a fair value gap right here. We tagged it. We could reach up into this, so the only reason I could get stopped out if we want to reach up into this fair value gap right here. But I'm hoping that we don't. All right, we'll see what happens here. I'm pushing my stop just a little bit towards just above the consequent encroachment of this fair value gap right here. So it's sitting about right there. I don't like that it's leaving these equal highs here. The equal highs are right here. Just waiting here. Just waiting. Let's see how price wants to play out. Probably going to get hit here, but it's already violated my breaker, but I'm already in the trade. So you have a proper stop loss and you let it play out. All right, we're just a tick away.
Order filled.
All right, stop there, guys. All right, so let's go through and figure out. Let's see if did this make sense. And if it turns right here, I'll be pissed. High, low, higher, high. We grab liquidity. This fair value gap here, fair value gap here. This is a great trade. The only thing I'd say is we're not in a macro. My entry was at 1127. So I'm not disappointed. I mean, obviously you're disappointed that you have a loss, but it's totally. I've heard so many people say, "Oh, it's fine that I got a loss," but I understand. It's like, it's inevitable that these are going to happen, and this is the model that I trade, and I've seen it work so many times. Sometimes it's not going to work. I have another. I also keep track of another model, this breaker model, but with a 15-point stop loss. So my entry would have been somewhere around there, I think, right? So 15 handles would have been right here. So that still would have been a valid play if I did a 15 handle. But I haven't been doing 15 handles. I've been doing 10 handle stop losses. Not bad. It happened quick. Maybe it wants to purge a little bit higher. Or maybe it wants to run for all-time highs. Oh. I like how the entries that I tape read for you guys turn into winners, but the one I actually get in didn't. All right, so we just closed above this. It would have been invalid. I do like these smooth lows right here. And it doesn't, remember what I said? It doesn't surprise me. Is that once we get up here, we might chop around for a little bit. So I think the only mistake that I can really identify on my end is that I should not have expected price to make these and run back down so fast. I mean, that's not what a curve looked like. I think I was actually I was in the middle of showing you guys, and then I started seeing price move. So here's this level here. When price moves, it wants to make a curve, something that's relatively, a nice looking arch. That's, if you look at price action, I mean, look at right here. It is relatively about the same. The width apart from the highs going up to going lower, it's about the same width. Do you see what I'm talking about? The same goes for this downside. We go down and then we go up. It's a relatively symmetrical on either side of the curve. Well, the same should go for a lower time frame. So I don't know why I just got in the moment, but I should not have taken that as my short entry, because price sometimes, or most times, will make a nice symmetrical curve. That means we should be looking for short somewhere around here, and that's around noon. It looks like that would be around the noon time frame. There are in some cases where you'll see a nice run up and then a sharp drop lower initially, and then it consolidates, and then it will continue over, ending the curve to be somewhat symmetrical as far as time goes. So those are the things that I should have been more conscious of, and basically what that tells me is I should have waited till the macro. The macro would have been right around here, and we may see that run around lunchtime. We'll see what happens around lunch, but that was it was just too nice. I mean, it was high, low, higher, high, lower, low. Hit the level. Okay, I have to put risk on the table to be able to make money, and it doesn't go lower. It goes higher. So it hasn't even hit the high yet. So we're entering a level of consolidation because we have already hit this high. It doesn't have to go higher. This is all-time highs. If it wants to go to all-time highs, great. It's going to go to all-time highs. But I'm not looking for that. We're already in very high premium. I want to look for a short. That's really what I want to do. Here's an inversion. I would not be taking that because we already grabbed these highs. We do have relatively equal highs, so it could work out, but it's lower probability, so I'm not interested in that. 5 seconds left. Your swing high would be right here. Okay, your entry would be there. Break even would be right here. Very high chance of being stopped out, but let's see if it hits. All right, so stop is moved to break even right there. So your stop would be right where my cursor's at. All right, and there would be your target. You get out there for basically 5 points. All right, guys, I think I'm going to call that a day. I got my kids looking at me through the glass. Been on for just about under 2 hours, so I will be on tomorrow, but tomorrow will be a non-trading day. It's a It's going to be a demo day. It's the day before NFP, so you really don't want to do live accounts before then. Price can do all kinds of funky things. So that's going to be it for the stream today, guys. Thanks for watching, and I'll be on tomorrow, and we'll look forward to seeing you.